All right. Recording, going live. Today is February 10th, 2023. We're going to talk crypto markets and just chatting. And here we go. I did lower the, excuse me, I lowered the bit rate a smidge as well. Hopefully that'll help keep us connected throughout. And action. We're rocking and rolling. So, welcome, Josh. My name is Ted. This is the February 10th edition of the Crypto Flight Path. Uh, It is definitely Friday, and I definitely had a hell of a week. How about you?
Yeah, it's been a week. I've been doing some traveling, so I've kind of been all over the place. Was up at 3:30 yesterday, went to bed at 7 last night, finally refreshed, back at it, coming into the morning with a clear mind, and lots have happened in the crypto markets in the past 24 hours, right? We had a trade that we took that went against us. We can talk about that, why that's not a big deal, why
Yep.
we're happy that happened, and there's some more news regarding the SEC and Kraken since we talked yesterday.
Good
I don't
deal.
ultimately think it's a big deal, but we can get into that. But yeah, it's Friday, and time to rock and roll.
All right, right on. Well, friendly reminder to everyone: do your own research, be vigilant and vigilant, and look out for yourself. Manage your risk, which no matter which upside or to the downside, do do your diligence and be vigilant and all that good stuff. Kind of redundant. And anyway, so let's just tee it up again. I'll kick us off. We'll talk a little bit about the we tried longing ETH USDT kind of as this Kraken stuff was starting to unfold. The rationale, which I'll get into, was simply that we had pulled back to this former support level, and the market hadn't decided to go lower, or excuse me, it had decided to not violate that level yet. So we made our bet. We set our stops. We decided when we made a really important distinction or decision, I should say, is that to harken back to when I was working with the big boss at the fund, his question was just no matter what trade you put forth, how do you know when you're wrong? And we'd have to be able to answer that question. So if I made a recommendation, I remember very vividly watching the Intel chart for probably 6 months. And every 2 weeks or so, I would recommend that. And he would come back and say, how do we know when we're wrong? How do you know when you're wrong if you're long this stock? And anyway, or this instrument, whatever it is. So we'll talk a little bit about that, and then get into like more about what this what I've observed in some of the financial, especially the crypto financial media, is the regulatory fear that has started to spread a little bit, and uh, it's so irritating in some respects because we think about depending on who's talking, they're talking about how regulation is good, and if regulation had had a chance to be in place around FTX and all the things that they were doing, they wouldn't have been able to get away with much of what they got away with in the first place, and it may not have been such a nasty thing. But ironically enough, we see the SEC starting to flex its regulatory muscle and begin. I guess this is probably the beginning of a lot of enforcement action, and naturally price poops and people crap the bed, and there's this the narrative is or in the headlines we see this, oh, regulatory fear, price this other thing is bad, this other bad thing is happening, and it's you see it show up in the price action. So with that, I'll pause and say, Josh, anything you want to add to that, or anything that I overlooked, or
No, I think that was a great analysis, kind of, and kind of like something that happens in these markets, and you'll see this happen is the FUD machine comes out in full force, and it's coordinated. And if it's not coordinated, it's universal luck, right? Because there's a reason that you start to hear all this stuff, and it goes back to some of the stuff we talked about earlier this week. Is the big players want in, right? They do. They're not going to sit here and watch this opportunity go by. So what you kind of see is a long-term investor, which Ted and I both are. You have to look at some of these actions in the concept of okay, what happened with Kraken and the SEC ultimately, I don't think is that big of a deal. They basically came out and clarified that, hey, look, Kraken didn't disclose, how the yield was being generated essentially, right? They want you to come out and say, disclose the risk. right? That's what they said. That's what Gensler came on TV this morning and said. The issue with that is, Kraken could have went to the SEC and there's no guidance, right? And so
Hmm.
it's kind of a little bit shaky. That being said, we knew we were going to get some regulation stuff. They wanted to before FTX. FTX gave them a reason. So as a long-term investor in the space, it doesn't change anything, right? Like, the SEC's action against Kraken doesn't mean you can't stake Ethereum or any other cryptos. You just can't do it on Kraken's exchange. And then we see Brian Armstrong with Coinbase came out and said, "Look, I'm actually going to fight this." And so that goes to your point yesterday. Maybe Brian Armstrong is in a different position than Jesse Powell and Kraken. Maybe Brian Armstrong is more, I guess, has a bigger war chest with the lobbyist and is in a position to say, "Guys, look, you know, you can take a little bit here. We'll give a little bit, but ultimately, this is good for consumers. It's good." And the other thing too that's funny about it is like, you know, the government can tax staked income. So it just doesn't, to me, it's kind of like, don't you want to be able to tax some of that staked income on these centralized exchanges, which make it very easy for you to do that? Long way of saying, like, look, all this stuff, even if we get more FUD regarding, exchanges or more actions from the SEC, all that is another opportunity for long-term investors to buy Bitcoin and other assets that you like cheap. And that's an opportunity. As painful as it is, as frustrating as it is, and these hype cycles and FUD cycles, they don't last forever. As soon as all the big boys have their bags filled up, we'll be right back at it. And I think it's interesting. It coincides. Maybe we can pull up a chart from Rect Capital where he talks about the macro trend of Bitcoin in particular. And in regards to the number we have to get over in the next couple of months, it gets easier and easier as the months go by because that number to break the downtrend becomes lower, if that makes sense. But that's what I wanted to
Yeah,
add to that. I think ultimately, forget all this stuff. Like, who cares? The SEC, we'll get into the charts and all that stuff and how it affected it short term, but long term, nothing changes. The plan remains the same.
yeah, I'm in agreement with what you're saying around this is a it's not a I think half of this is what I think, and half of this is what I'm about to say. Half is what I think, and half of what I've been reading is that this isn't a bear market, or it's not the return of the bear market. And I'm going to go back to the crypto panic side here. This headline is a good example of like people trying to generate viewership by tapping into like the fear that is a little bit present in my opinion. Bitcoin bear market back or a slight correction. And I think that one thing that people that are new to markets and don't haven't spent a lot of time understanding like what constitutes a market. There's a buyer, there's a seller, there's a market maker, and like the mechanisms and like what actually drives price action in some cases. And the point I'm trying to get to is that markets often every day of the week, every day of the year, especially I mean obviously in 24/7 markets, there's 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 markets get overpriced. I mean, people pay more than what an asset might be worth just to have a piece of it. Using a stock as an example, stock prices go up and people are paying a premium. If you look at the book value, if you look at what a company's actually worth, and then you look at what a stock that's trading, say, three times what the earnings are. Like if you look at the value of the company and you look at the market cap of the stock, you go like, wait a minute, this stock is overpriced because technically we're paying a premium to own this stock today. And then on the other side of that is that you may have a company that's worth $100 billion, but their market cap is only there's something less than that. You could say, oh, this stock is trading at a discount relative to what their earnings are or what the company is worth, its book value. And you start make it even simpler is like in an auction, like go to eBay and you want to buy a watch and someone lists the watch for sale at $1,000 and you know that it's worth say $6,000. You might say, ooh, well, I'll bid $3,000 and I'll be the winning bid up to this point. Then somebody else comes along and says, well, wait a minute, I still think that even at 3,500 it's still undervalued because it's really worth six. And you get all these market participants coming in and they all have an idea of what something's worth to them. And that makes up that constitutes the market for that asset. And then let's say that people start competing with each other to bid to get up to that $6,000 price because they want that watch because then all of a sudden somebody's like, you know what, I'm willing to pay more than it's worth just so I can have it. And these are real dynamics and factors that play into, especially, I mean, looking at what people are willing to pay for Bitcoin, for example. Anyway, the point I was trying to get to is that markets get overpriced, they get underpriced, and then they correct. And I think this, and we'll get into a chart in just a second. Uh, the point I'm trying to illustrate here is that this looks like a slight correction more than a return to this bear market thing. But who am I? I mean, this is just my opinion. I mean, I don't know. If I had a crystal ball, I'd be like David Geffen out like a yacht on a $500 million yacht, sending posting on Instagram that I was okay during the pandemic, and anchored off the coast of St. John, while the rest of the world is, like the economic or the system is collapsing around everybody, and they can't leave their homes, but so I'm just trying to like realign some perception or assist in realigning some perception here that markets get overpriced and they correct. They get underpriced and they correct. And as when you apply your trading or bringing a trading mind to the table, you're looking for things that are underpriced and maybe you want to buy them until their price corrects upward. Or if you think you're looking at something that's overpriced, yeah, or has price has moved up too fast, is one way to look at it. You might consider short selling that because you think that the market is over or it's overbought. The people, like, for example, like ETH is not worth 1600 or 1680, and I'll look at we'll flip over to some charts here. Hang on a sec, I'll get over to charts. And what we're looking at here is a daily chart of Ethereum USDT, and you see this big red candle is, and I'm going to make this a little bit bigger for everybody. This is a daily time frame. This daily candle is the one that we attempted to long at this level, right at the bottom of this wedge that's been developing since basically the middle of January. Call it like almost the third week of January. This uptrend, it looks like, as a result of the SEC enforcement action that caused sentiment to change. We got long basically at this trend line. It went against us. We got stopped for one unit. We lost 1 unit of risk, which was exactly within our plan. We had a thesis and we put the thesis to the test in an actual trade with real money, and we got stopped out. And it kept us, not only did it preserve our remaining trading capital, but it kept us viable to then consider rethinking our positioning and trying to understand where we think the market might go next. And lo and behold, this next daily candle that's developing, you notice the range is much smaller, but it also did not come back up and retest this trend line or this wedge line that's developing. So I'll pause there for a second. And Josh, if there's anything you want to add to this, like, first part of the like chart review.
Yeah, I think another thing to add to, even in the losing trade, we found some winning information. One, we figured out that our stop loss worked, right? So we have confidence that, if we set a stop loss, it can hit and it'll get triggered. Two, it's interesting because, I like the way you analyze stuff, Ted, because you seem to be able to look at a chart and keep it within the chart. I like to apply the outside world, and that might not be the very best thing to do. But we had some news yesterday, that our trade, we couldn't have known that that was going to happen, right? Like that was indifferent to what we were seeing at the chart. But that's why you have to mitigate your risk, right? Because these markets, stuff happens fast. It's a turbulent time in crypto. We can talk about whether it's smart to be trading right now or not because of everything that's going on. I mean, the thing is that what you want in trading is volatility, and it feels like that's what we're going to get. And be interested to get your comments on that as well. But what we're trying to do here is learn, right? And so even though we lost, we learned a couple things here, which will assist us in further trades moving forward.
So I agree, or I also appreciate what you shared in that we need volatility in order to facilitate like reasonable risk reward ratio trade setups, and that's what we're ultimately looking for here. And to wind the clock back a little bit here on this 4 hour chart, the the 1680 level, yeah, 1680 here, one, two, three, four, very clear rejection. The market was saying we're not going any higher right now. There's not enough buying pressure to to sustain another move, another leg up or another leg higher. And I'll zoom out a little bit on this chart to say that like the next major resistance level above this 1680 is about 1790. Call it 1800. So another $100 worth of price appreciation to the upside was the potential if the market gave it its vote and said, we're going to risk on. We're willing to take the risk of buying Ethereum at this level relative to where it's come from. We think there's still enough there. But to also put some more like varnish or color on this idea that you were articulating, that you don't know what you don't know, especially as a retail trader. I mean, here I am sitting, I'm somewhere in Florida. I'm on Starlink internet, no less. So I'm not in front of people. I'm not working in the financial system. I don't have a lobbyist friends that can call me or text me from Capitol Hill and tell me, hey man, this SEC enforcement action is about to drop. You should get the hell out of whatever you're doing. Close out everything. Sell, 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 sell. I don't get those phone calls. All I know how to do is look at the chart and make some basic assumptions or fundamental assumptions about what I think might happen. And the whole point of yesterday's stop loss order that did end up getting triggered was that we didn't know, or the reason, or let me try to say it another way. We reasoned that we would sell, or excuse me, we would take the long position here, and that if it continued up, we would probably take some profit right about here, or take all profit right about here. The thesis and the underlying wisdom at the time was that this enforcement action was basically going to tell people, okay, I'm not willing to put risk on up at this price. Let's let it come back a little bit so that my risk reward ratio is probably a little bit better, a little more skewed in my favor. Anyway, the you just don't know how people are going to react to things, and there was a lot of emotion, and then you saw what happened. Had this big impulse lower, got us stopped out, and then interesting thing is starting to consolidate in this range, and that's probably a good thing. The next idea that has come out, and I'll transition now to talking more about like things change all the time, and in order to be successful, in my opinion, you have to be able to forget about where you want the price to go and think about where it is probably going, or in probable, or thinking in terms of probabilities, like where is it likely to go based on these new conditions that are present. Like you can't go back and you can't unlearn the things we learned yesterday with regard to what the SEC is doing. And now that we've gotten some clarification, you see the prices consolidating, people are reevaluating. Okay, if I had sold and gotten short up at these levels, my stop would have been up here. We would have gotten paid pretty handsomely. This is a nice move lower, but you see, interesting thing, it didn't go much lower than, or it didn't go any lower than 1525. Basically, it says 1524.28 was the low on this trading view chart. So that's where the market decided that the selling pressure evaporated at that price, and we've been consolidating here. What we have marked out here, though, is that if over the next week or so, if this now that this enforcement action is public knowledge, it's possible and perhaps even likely, in my humble opinion, that sentiment it's going to be hard to overcome this idea that price will probably go a little bit lower over the next few days or maybe a week or two, until it comes back down into an area where there was more buying pressure that supported, or these ideas support levels. So, and we talk a lot. We've talked this whole week about confluence and looking for confluence, and I think interesting confluence here. We had the Fed raise 25 basis points. Then we had Powell and the other Fed governors talk, and price drifted back down to this level and kind of hung around in the upper part of this wedge. And now we've got another catalytic event, not a catastrophic event, but a catalyst, a catalytic event that brought price back down to this level and basically is testing the conviction of anyone who was long here or was building a long position as the lower highs, or the, excuse me, the, the higher lows were forming here at the bottom of this range. That got violated. So that, as a market participant and someone who's interested in trying to trade these moves, suggests that the the risk reward setup for a move back down into these lower bands here, like the 1400, 1300. I mean, gosh, even I've marked it out, this short position. This is a 4-to-1 idea that I actually have on right now, and is it's not moving. I mean, I'm minus 1.4%, but the rules, the same rules apply. We have a I took a half a position size. I doubled my stop loss range. I'm only risking the 2% or 200 basis points of my trading account value, and the rationale is that the the bigger market moving participants are going to just sit this one out and wait for price to come back down into a more favorable range. I would argue that as we get um, people sitting on the sidelines over the weekend, this is just a hypothesis, okay? Uh, we get market participants like retail and other smaller like in terms of capitalization, like I'm capitalized up to a certain point, but I'm not a hedge fund with 9 figures of capital, of firepower to be able to take like substantial size trades with the
Yep.
appropriate risk management. So what I'm suggesting is that by putting on this 4-to-1 trade short in Ethereum, because of all of the sometimes the way that people misunderstand things can be an advantage, and I think that one of the things that is fundamentally misunderstood is not just like crypto assets by like the average retail trader, but they misunderstand fundamentally what staking is. And look, the way that we're wired is as a species is that we try to think in the simplest version of things. And if the simplest version and our amygdalas get involved here, and it's just like, uh-oh, this is not good. I'm gonna get out, or I'm being forcibly liquidated because my long position didn't work. I may either not participate, or I may say, let's ride this back down. So the stop is set at 1612. So if this reverses and we hit 1612 up from 1543, then we're out, and we know that that thesis is in the trade's invalidated, or the idea has been invalidated. Readjust. It doesn't matter. We've got to move forward. It's only hindsight at that point.
Well, I like how you were able to double the stop loss and take the same amount of risk. You'll have to walk me through how exactly you did that. We don't need to do that here. I think we can, something that's important as we, develop this channel is to, and you've already done it too, is to separate out videos that walk people exactly the mechanics of how to set up these trades. Because I didn't know that when I was doing this. Like I told you, I was doing it all
Mm-hmm.
wrong. I was taking, the $1,000 and putting a 2% stop loss on it. And that's how I was risk managing. And there's just much better ways to do that. And it's not necessarily intuitive, but once you understand those tools, it makes trading, it just makes it a lot more, I guess it makes more sense is what I'm trying to say. But I like the idea that you've given yourself some room there on that trade uh, to go up a little bit uh, because
Yeah,
I
I
think,
can.
yeah,
Well,
go
sorry.
ahead.
Go ahead. I didn't mean to interrupt.
No, I was just going to say because these markets tend to move. If you've got a little bit more room to work with on your thesis, I think that's good.
One of the things that helped me decide that I wanted to double the amount of space that I gave the stop the for the trade to go against me, it effectively cut my position size in half. So the quantity here is 27.1. Okay. So basically, it says that if at the current entry price, if the trade moves this far, then I can only take a position size of 27 lots, and a lot size in the trading platform that I'm using is zero point 0.1 ETH.
Yep.
Okay, so 2% risk. It counts the ticks and all that stuff. We'll get in, tick values is a whole nother can of worms to unpack. Where I'm going with this is the fact that when I first set this up, I had the stop here, and I thought, well, wait a minute, if we really are getting a lot of this chop where there's a lot of emotion, like the volatility is increasing, and we're getting outside of these normal ranges, I better give myself a little breathing room because I don't know if this is going to work. That's the I guess that's the magic of trading, is that or speculating or gambling, depending on who you're talking to. The magic here is that you really don't have the slightest idea which way this price is going to go. So I gave myself double the breathing room, but I'm only taking half the position size, and I put my take profit down here. And here's the rationale for this. If you look back to where we were at this 1800 level, we came all the way down to what 1100 basically, and touched this was tested twice, and the market decided that it was willing to plow in here and drive price higher. I think that this catalytic event with this regulatory enforcement action is a bit of a wet blanket, in terms of like bullishness in the short term. Not saying that we aren't going higher at some point, but I think that for like bigger players who want to take um, really good thought out trades that are like on the right end of the risk reward spectrum, they're more likely to wait and see if price comes back down into this area here. So the rationale is that this trend line, or this bottom line of the wedge here, is is now established. It stands to reason that if you're patient and you want to get long, you can come down here and look. And the rationale is that we had this one, two, three resistance three times this level of 1350, call it, was tested and failed, or failed twice, or couldn't get it back up through it. It took three times to hit that. We got back up here. We're getting summarily, or like very firmly rejected in this channel up here, just like we got firmly rejected when SBF took a turd all over us here, and FTX dumped the world into chaos. Okay, so now pretty strong rejection here. It stands to reason that we could theoretically come back and retest these levels down here to see if there's like substantial liquidity waiting to get in. Because by the time, let's assume, hypothesis here, if price does drift back down into these levels over some period of time, if you're patient and it ends up coming to fruition, the risk reward is then really great, because then you have well defined areas in the past that you can look at and say, well, if I'm long here at 1220 or 1230, then if it goes any lower, then I can get out here and know that there might be like substantial big player support down here, people waiting for the apocalypse, like basically the buyer of last resort types that are going to wait because they can.
Yeah, if
And
you get some sort of, you know, I don't want to say the word pandemic event, or some sort of, all the bears that are calling for these crazy, like recession plus major geopolitical conflict plus aliens show up plus asteroid plus, all these things that bring Bitcoin down to 12 grand, right? Like that's where the big guys are going to step in. Didn't mean to cut you off there. I just sent you an email with that rec capital thing. I think it's good to bring up now, because if you look at where you were going out into March and April to where those prices are down in the 1280s to 1320 range, this is another example of some confluence with a longer downturn trend that, as I was talking about earlier, as time goes by, it becomes easier and easier for the market to break that longer downturn trend. Uh, and so I think what you're saying here makes a lot of sense too, that those prices could drift back down because of the wet blanket action. And it is interesting to look at your arrows there. Every time we tried to go up, we had some sort of FOMC or POW or the SEC. And it's just interesting how and when and why those things happen, right? And so I think we will get some more over the next couple of weeks and months, kind of FUD or announcements or SEC regulation along those lines. And so I tend to agree with what you're laying out here. Uh, and I think the rec capital chart is some confluence as well.
Yeah, so I've got that pulled up. You see a very like I love that on these. I like that he publishes, or he or she, whoever
Yeah.
this person is, they publish these monthly charts, and it's like, man, price is doing its thing, and like when I look at this, like I can see this trend, or this upper black line that's sloping downwards back towards like the 13,000. We see this like big monthly candles lower. I mean, there's no denying that sentiment was in a toilet, and people, like, the only thing that matters is like who's willing to buy and who's willing to sell at the price, and it's the price. Price is ultimately like a result of like the way people are literally feeling when they're pressing the buttons. It doesn't matter if you're in a hedge fund and you're a portfolio manager and you have a $500 million. If you're selling the asset, or if you're buying it, you're right. It has to do with like where people think it's going, and it has to do with the emotion, like the raw fundamental emotional drivers, and it's just people. So sentiment was in the toilet. It collected, and we've basically gone sideways a little bit here. But the point I'm trying to get to is like the with these catalytic events, and I'm going to flip back over to the chart again briefly. Uh, yeah, to point out where I think makes some sense. Again, this is not a prediction. This is just an idea. Is that over the short term, it's incredibly it's easier for me to make a case for a pullback. And we talked about pullbacks and corrections. So one might say that going from, so I had the take profit at 1240 on this, or no, 1238. Call it 1240. After it was at 1240 back in January, people were perfectly happy buying this. We ran all the way up here to almost 1700, basically. And then all of a sudden, people are like, wait a minute, Ethereum's too expensive now. What happens if price retraces and like corrects back down to these areas where people's mindset was, okay, I'm willing to take this risk. I'm willing to buy at this price. So that's the idea that I've been, or that idea that has been developing based on things that you just talked about. We got the Federal Reserve talking to the entire world about rate policy, and that it still needs to be tighter than it is. Then you get Powell, the leader of the figurehead of the Federal Reserve, getting on TV and talking about what they think and all this other stuff that ultimately matters. And then you've got another government agency flexing its enforcement muscle, and the ice, or the aircraft carrier is turning now very slowly, and the government is going to start. Oh, this is just my opinion. I think it's likely that you see more and more government agencies and other people in positions of authority start to talk more about the position that they are taking, like what their stance is, like a policy stance. And if the political apparatus thinks that the constituents will like what they hear if they have a strong stance against things, like listen to what Elizabeth Warren says. Okay, she doesn't give a crap personally. Her only mission, in my opinion, is to tell her constituents what they want to hear so that she can get reelected. Okay,
Well,
she's a politician,
she's
for
she's
Pete's sake.
she's a big bank puppet, man. I have a hard time listening to anything that woman says. Talk about Talk about disgusting.
I
Jesus.
yeah, I have a hard time. Why I should pay attention more than I do, so that I at least know what I'm what I'm potentially up against in
True.
terms of like
True.
trying to position. Remember, trading is about emotion and it's all about positioning, and it's not about being right. It's about, are you making money? In this case, I think unless I don't know, let's talk about the bull case for a second here. Like this is what if we're completely wrong here and this pullback to support is nothing more than just getting a bunch of weak hands out? Okay, what would have to happen? Would the Fed have to come out and say, based on, or what would have to come out of Jerome Powell's mouth, that they were going to leave rates unchanged? Imagine all of the wet blanket, the monetary policy wet blanket coming off of markets if he were to utter, we're only going to keep rates the same, not raise them. That would be a huge surprise, in my opinion. Now, I need to qualify that statement with that. I need to look at what the Fed funds futures are like. Are what is the market pricing in terms of rate hikes? And if that were to suddenly roll over and people started pricing in no change versus a raise, or a cut, I think things have to get a lot. I mean, I don't know what I don't know, but I think that things would have to get a lot worse, economically speaking, than they are for the for FOMC to be like, whoa, we need to start easing and be more accommodative, and policy needs to go the other. I mean, we need to take a dovish tone versus a hawkish tone, and start cutting rates versus either leaving them the same, or hiking. So,
Well, I think
man, what a
that's why a lot of participants are on the sideline. They're just saying, "Look, I have no idea what the hell's gonna happen. I don't feel like, it's even worth trading at all. I'm just gonna wait this out and see what happens," right? And that's a very valid strategy too, by the way. I think for us, what we're doing is we're learning and, we're kind of trying to perfect some of our trading strategies, and we're okay, losing trades at this point, because we're not risking a lot, right? And so, I think it's important to talk about the fact that look, there's a lot going on right now that nobody can control, and if you're a new trader, maybe the best strategy is to just wait and see how all this plays out and get more direction in the markets, whether it's up or down, and wait until some of this regulatory stuff comes out. And as far as the regulatory stuff goes, as far as I'm concerned, let's just get it done, rip the band-aid off. Now they're
yeah.
not going to do that. What they're going to do is take forever and not be very clear, and and the reason I think they want to do that is because I'm taking the position that they're loading up their bags. Them and their buddies they want into this. They want, if you take somebody like Kevin O'Leary, who I'm indifferent on, right? Like, I've met him in person in Vegas. He's a nice guy, but he seems to be a little bit Weasley on certain things. He's been screaming for regulation. He's one of those guys that has access. He knows when it's coming, right? He knows when the FUD's going to stop, when the regulatory stuff is going to happen, and he can position accordingly. Uh, I don't think they're trying to kill crypto as much as Twitter would say that and all that stuff. I think what they're trying to do is suppress it as long as they can while they figure out, and suppress, manipulate, whatever. You could argue that they can't do that, but and that it's just price action, buyers versus sellers. But if I'm them, and I have the ability, the market cap of crypto is still small enough, it's nothing. These guys can
Hmm.
take these actions and have an effect on the market, especially when, it's down. So, I think they're going to try to do everything they can to keep the price from exploding. And they even came out and said that, right? In 2017, when they launched futures contracts, they said, we're going to tame the crypto markets. All right, well, whatever. Like, maybe you've been able to do that to a certain extent, but you can't do it forever. And we can get into those like reasons why, because there's no actual physical settlement, that they can't do what they've done to gold and silver. But I think what as far as we're concerned though is that we've just got to keep an eye on it and watch to get general market direction. And I don't know, I'm kind of rambling. I kind of forgot what the point was there, but
No,
I
no,
hope
it's
that.
your point about like sitting on the sidelines if you're new. is probably good advice. That's what I was told back in 2014. Two things. One, you're undercapitalized. And I didn't know what that meant. I now know what that means. That just means that uh, in no uncertain terms, that if you're taking these bets and you don't know what you're doing, you're likely to be drawn down to zero sooner than later. And if you're not employing the right risk management strategy and only losing one unit of risk that's acceptable per trade, you won't be able to weather a drawdown where you're wrong 10, 15, maybe more times in a row. The big boss used to tell me that there were periods where he would lose 20 to 30 times, and it would, like, every swing lose, 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 and it would take 2 or 3 weeks before he'd have a winning trade. But every time he took a nick, his position size got a little bit smaller, so he literally lost less every single time. So by the time he was losing his 25th trade in a row, he was losing less than 1 unit of risk than when he started. So the capital preservation mechanism did exactly what it was designed to do, and it kept him solvent and in the game, so that when sentiment changed, or he ended up getting it right for a change, he would have this, like, what do you call the like a 3 bagger, 5 bagger, 10 bagger. I mean, like 10x your risk unit return on your swing. Then it would well make up for the little nicks, the death by 1,000 paper cuts strategy. And what I've drawn on the chart here, Josh, on this daily ETH/USDT chart, is that what I think what I'm looking to happen. I don't know if this is going to happen, but I think it's entirely plausible that we come back down a little bit to this lower. So we had this big move back on the Saturday, like holy crap, Saturday the 14th, bam, like really big range on this candle. We retested effectively the halfway point. Isn't that interesting? We had this move up, and then about the halfway point, a couple days later, Wednesday, we retested that and then set off for another move higher. Okay, this area right here then corresponds with higher low, got a bit of a rally here, got rejected, and this is the range because some insiders knew some shit was coming. Oh, excuse me, they knew some stuff was coming down the pipe, and then bam, we got whacked. But we came back to this lower end of the range. What I'm looking for is for, like, on this candle or the next day. So over the next 2 or 3 days, if we drift down and we can't hold this level, or if we do, then what it implies, in my opinion, is that this blue line becomes resistance. We might see it perk back up and get rejected here. And if it can't get back up into this range, then it signals, again, it's not for certain that we might come lower. And I think we drift. I mean, if we can't reclaim this area, that means price has to go lower, because the buyers are going to be sitting down here saying, okay, if it's too expensive up here, then I want a better deal. Then I'll take it down here. And if you have the ability to be short, then great. You can look at this and say, well, if it were to come back up here and get rejected, I would put on a short position and manage my risk accordingly. But uh, you know, something's probably going on right now. We're seeing this. We're retesting yesterday's low soon, it looks like. And we have two trades. I have two trades on right now. Short ETH based on this risk reward setup, and then also Aptos APT. Same strategy, and I'll go over to that chart real quick. So same strategy. I doubled the amount of range that I was willing to let it run, with the understanding that if we're looking at, like, where it was rejected, if we're down here at this level and we get back up, we're likely to, this is first resistance, this is second resistance, and then if it gets back up into here, then I'm out. Meaning I need to reevaluate my positioning, but I mean, this one's working as well. And the idea, the rationale is that we had these really big up moves. We got rejected. We were short in here. We caught this little move lower. Hindsight now, I can look, well, gosh, Ted, why didn't you just leave it on? Well, I didn't know this was going to happen. I mean, gosh, who does? And got rejected here, got really rejected on the 8th. Okay. And now it's moved lower, and we're back at I guess you could call this a support zone or area value. But If the sentiment doesn't change, price is going to come back down here and test. Are there buyers here? If not, are there buyers here? Oh, no. Well, gosh, maybe there's some buyers here. We saw a lot of sideways movement here. That means there's probably, maybe, there's a lot of folks who took long positions here that are going to be looking to defend those once the FUD peters out and gets back, drifts back down.
Do you know how to add the volume on the sides?
I do not. I should do that.
It's a pretty
Or I
well, I
should
think
learn how to do that.
it shows my understanding is it shows where liquidity could potentially be for certain zones.
Yeah.
Uh, but yeah, we can mess with that too. And it's all this is just stuff I've seen people do. And I don't know the value of it or not. But I think it would coincide with exactly what you're saying.
Yeah, I'll take it as a to do to figure that out. I haven't traditionally done that. I've just made some basic assumptions and used the I've tried to keep it in my head just really simple. Here's the bias that I have developed up to now, with the understanding that that bias is either valid or invalid, and I won't know if it was valid or invalid until I try it. So the rationale for this short position is that we got rejected here, and we these now these are not huge moves, but I mean that's pretty decent like price action that says we're going low. And I would argue that we probably come back up and get slapped here and come back down. And if we can't, if the buying is just not here to support it further, then it'll have to go lower to keep things moving. But I don't know how these are going to play out. They happen to be working at the moment. It remains to be seen if they work for the rest of today and over the weekend. And I've given myself plenty of room here to make a decision if I want to cut them early. But I'm just gonna let these ride because I think the thesis is potentially intact at least for the next few days, like 5 to 6 days, calendar days. Um, we may see some little rally. I mean, basically, with as the saying goes, the trend is your friend. And in a downtrend, you want to sell the rally. Okay, great. But in an uptrend, you want to buy the pullback. Fine. I'm thinking right now, if we're in a bit of a retracement or a bit of a correction, every time price moves up a little bit, it's likely to attract some selling. I don't know that if that's 100% true. I don't can't see inside other people's heads, but that's what and markets do what they do, and we can only like latch on for the ride.
Nope, I hear you. That makes a lot of sense. I mean, it does. I mean, that's it's interesting watching you kind of, give your analysis on these because it makes sense, right? And it's something, it's just the reason I think trading too could be valuable to, what I've traditionally done is it gives you further insights onto the market. So say I'm only interested in trading on, a 2 or 3 week period. I can look at this and say, okay, like, hey, maybe I'll wait a little bit before I enter. Or if I'm long term, I'm say, okay, I'm an ETH bull and I want to accumulate as much as possible. So if I'm buying it every week, why not look at this and say, okay, well, look, it doesn't look really strong right here. Maybe I can use this kind of information to assist with entries for long-term bets too. But then, as I watch you explain it and your rationale, and then what we're doing with the day-to-day trading, it just makes sense, right? And the more I see it, the more I understand it, which I think is really valuable. And I think that's like when we do these charts, I think that's where people are going to get value is just consistently coming and watching because I learn something new every day, right?
Well, good. I'm glad that you're. I'm glad that there's value or that you're able to learn something and like help further develop your own understanding. And at the end of the day, I think that's really important. And one of the things that the or where I'm going with this thought is that the the big boss would say you shouldn't take other people's trades because
Yep.
we would purchase analysis from like Morgan Creek, and there's this guy named Greg Weldon who's kind of a gold bug. He's more of a commodities futures guy. Like he really like really into gold more than anything else. Greg Walden actually worked for the same guy that I used to work for, and the it was interesting that Greg Walden went on to do his own thing, started his own fund, and then started doing his own analysis and selling access to that and whatever. So we would read his analysis, and part of my job was to consume the analysis and then summarize it so that I could basically explain like he was five. Instead of him reading 98 pages of stuff, I would read the 98 pages and then write it up on one page and be like, this is the gist. He
Yeah.
says gold's going higher, and we would say, we should probably short it or something like something to that effect. We didn't necessarily take their trades, but we learned that they had a particular bias, long or short, or things are good or not good, and things are either overpriced or they're overvalued or undervalued. And on that whole like idea of being like overvalued, some would say, well, at 1680 and 1700, the market is saying with no uncertain terms, and they're putting their money where their mind is that it is overvalued today at this price, and that in order to find someone to buy it, the price had to come back down here. And you could argue that for the moment, people think that ETH is only worth 15, 18. And it may come to pass that some people try to sell it. People think that it's undervalued here and think that they would want to like trade it, like take a trade saying that they think it comes back up into this range. But I'm not. That's not what I see at the moment. I see that and again, I don't know. I'm not plugged into the. I'm not an insider. I don't have access to that kind of information. But price is moving in this range right now, and people are making decisions and putting on trades, and it we'll see. We'll see how it plays out. I mean, we'll keep this chart active over the next few days and be able to talk about it in our next several video or live streams and videos about like how it played out and like what we either did or did not come to pass, and whether or not we were. Again, it's not about being right. It's about making money in the trading context. Meaning, if you're going to short-term trade, are you making money? Are you solvent? Are you staying solvent? Are you making money, or how much are you losing? And really, back to your thing about like newbies and people that are new to trading. I learned 10 years ago almost that in the beginning, you're not actually trying. Like your energy should not be focused primarily or even at all on placing winning trades. It was learning how to lose effectively so that you can lose enough times that eventually, like a stop, even a stopped watch is right twice a day. It's like not every. I mean, you can literally flip a coin in some cases to make your trading decisions, and sometimes you'll be right, not because you thought it was right, but because you flipped a coin, and there was the right confluence of events, and price went this way, and you happened to be long at that time, or price came back and you happened to be short at that time. There's a lot of it is just things that you have no control over. But in the beginning, is are you applying the right risk management strategy? Are you only losing one unit of risk each time, and are you sticking to those rules? And the thing the big boss would say is that I want you to learn how to lose properly so that you can stay in the game long enough when other people are getting wiped out and they're on the sidelines and they can't do anything. You're the one that can be in a position to take the trade, take the swing, and then have the market forces play out. And sometimes you'll get rewarded handsomely, but you don't get rewarded handsomely if you're out of the game. So that's why when we took our long ETH USDT trade yesterday, we only risked 1 unit of capital that we were willing to put into the game to test our idea. And we got confirmation that we were wrong, and we flipped bias, and now it's working. Not because we're not. Well, I mean, I put this trade on, but not because I'm special, but because I had capital left over to take a shot. Quite frankly, I
No,
mean,
that makes perfect sense, and, watching that and learning, I mean, I'm willing to, people say go paper trade or whatever, like, I just don't think you get the same learning experience that way. I think it means more when you have money on the line and you learn faster. And so that's kind of where I am is like I enjoy watching you kind of place these trades and move quickly in and out of them. As I get better at it, I'll obviously, do the same. But it is totally different than how I've made money in crypto before, right? Or in general, or investing. And so I find it fascinating too, because it's like, there's so much something interesting about trading is like, look, I've got, you know, all this time to fill. Investing is great and over the long term works great, but like, what do you do while you wait? Right. Like, and so, this is something that's very interesting to me. And I've enjoyed watching you kind of flip buys and explain. I think you do a really good job of explaining your theses and, why you're doing what you're doing. I think it's very helpful.
Good. Well, that's so this the current thesis on Ethereum, just because it was it made sense to us to at least to me to try these ideas, is that probably going to test these lows here for a little bit, and it may turn into some indecision, uh, which you can look back in history, uh, some indecision here, but I think it's entirely reasonable. Maybe it may not be likely, but it's reasonable to think that we come back down into this area to attract like some people off the sidelines from a risk reward standpoint.
Let's
I,
uh
I,
let's
I,
try let's try pull up the render chart if you don't mind.
sure. So render RN, yeah, RNDR USDT. So I left this drawing here. We drew this. This wedge started to develop. Looks like basically at the beginning of the month, and we saw. And this is a 4-hour chart, so I'll make it a little bit bigger. So we saw this consolidation, and then we got a couple of interesting little up thrusts. That was kind of a fake out, but it pulled back. Interesting thing is it pulled back and it held a support level here. So right in the middle, and then moved up and then came back and retested and said, okay, we're okay for now. Let's keep going. Healthy pullbacks, moves up, healthy pullbacks, moves up. Okay, bang. Then we started. So we effectively on the 8th started, price started coming back, and it paused briefly here to see if this, now I'll take the line and draw it out a little bit further so you can see that it collected around this line and then broke through, and twice now in the 4-hour chart it's gotten rejected at that level, and we've pulled back here. Now we're consolidating in another former area value. So we saw price got rejected here a couple times, came back, retested it, and then it developed support. So it's not an accident that it stopped here. What I don't know, and haven't put, I'll go on a daily chart for this. Um, I think it's not an accident also that without any of these like catalysts in the market, like price drifted a lot higher because that was the path of least resistance. And then we get back up into this zone, and looking at this as a trader, you think, okay, the risk reward to take the trade as it's breaking up here to go long is okay, as long as there's not some wet blanket on the market like what we discovered, the SEC enforcement action, bang, we pull back to this level to say we're not ready to go higher here yet. So I'm not entirely convinced. I'm not convinced that this can't go higher. I think that we have to come back down and retest these levels, this like 88 to 7, like 75 to 88, 75 to 85 cent range here, to see if there's people that are sitting on. And this is purely in my mind like a risk reward ratio argument, is that the risk reward is better if price can pull back, or if this market can correct back to this like 75 to 80 cent level, then I see like there a clear area, a clear definition of how to structure and think about what the risk reward is if I'm going long. Does that make
Yep.
sense?
It does make sense, and it's interesting because, I look at this as is what I wanna try to find too is that as these markets develop, and what makes the most sense to me, and you can get your input on this, is find some of these projects that are we talk in the traditional market's like relatively strong compared to the rest of the market. What I'd like to try to analyze is these projects that, when we had the run up, Aptos was strong, right? Render was strong. The AI coins were strong. Like, is that narrative going to stick around? Which coins are going to perform better relative to the rest of the market? Because if you're going to take a trading perspective, relative strength, I think, is something to be interested in and consider when you're taking uh, trades, especially if you're going long. What do you think about that? Does it matter?
They it does. The narratives matter. Read what Pantera Capital has to say. If you go find Pantera Capital on the internet, they publish things on LinkedIn. They have publicly facing materials that talk about their thesis, and it's the AI is a narrative more than anything else. I would argue. How many of us really know what AI actually is? I don't know.
Yeah, I'm not convinced it is
Okay.
what they say it is. So
Okay. So the narrative is a fundamental ingredient for moving markets, I believe, I would say. So if we look at a collection of projects that have tradable digital assets here in the form of tokens that we can trade on an exchange, for example, then if the AI basket is getting the attention that it needs, and really what I mean by that is if the people are taking money and putting it into the market, then that will and that's the the path of least resistance is higher because there's enough capital in the market to consume the token at that price, then the price will go up. I mean, it sounds really like obvious and like, well, yeah, duh, Ted. Tell us something we don't are, but I'm not trying to like be weird about this. I'm just saying that if you're looking at like where's markets require participants, and if participants are over here looking at AI tokens, then you might be able to, again, in trading, if you're trying to make your living as a trader, you got to go where the liquidity is. You got to go where the action is.
yep.
Where's the volatility? Where's the volume? And I mean, not to sound, I mean, I hate to sound like Captain Obvious over here, but when this token was trading down at these like 40 cent to 50 cent range, it was range bound. Okay. But then all of a sudden, the narrative kicks up and people start talking about AI. We got chat GPTs and all this other things and Google's things and this thing and Amazon's and blah, 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 blah. All of a sudden, you get all this volume, and price did the only thing it could do at the time, which was go higher because there was more buying pressure than there was selling pressure. So the market, uh, you could argue that it corrected higher. And then you could also argue that in the face of this like regulatory crap now, because the government and finance are so tightly intertwined because of all the rules, markets are now this particular market, the render chart is corrected back down to this level where people are kind of waiting to see, and it got some support here because there was looks like there was some indecision and like distribution in this zone here. So the 120 to 140 range came all the way back because it looks like it got a little hot. And definitely on this daily chart, the RSI was like way up in the 80s here, and that so confluence, you got a chart, you got price that's moved substantially. You've got an overbought RSI, and then you have an SEC enforcement action that hits the wire and sends a fear panic ripple throughout the system and the participants. It makes perfect sense that price corrected the way it did. So it's these shouldn't be like we shouldn't be surprised, in my opinion, that these things happen. It's more did if you were in the trade, did you have was your risk management set up appropriately that it either like got you out or it didn't get you out and you didn't get wiped out in the process? Because if you 100x leveraged this and ran up and didn't take the trade off up here and then it pulled back and it consumed all of the resources you had available to stay in the trade, and you got forcibly liquidated, then what the heck? I mean, if if that's your strategy, then great. But it's not my strategy, and I don't know that that's not very sustainable unless you have vast sums of capital that you can just burn. I
Got
don't know
it.
how to
No, no, no,
trade
that
that. I
makes
don't know
sense.
how to do that.
Well, this makes sense too, and yeah, the point is to mainly that I was trying to get at is that I think it is worth trying to identify the narratives in the crypto market, and as this next month, the 2 month plays out, and we kind of see what kind of, as you like to say, the wet blanket, what other actions come out, where the market wants to go. I think you can kind of watch some of these and see which ones perform better relatively, even if they go down. you know Say, I don't know, say Ethereum goes down 20%, but render goes down 5%, right? Like, I don't know that that would probably ever happen, but I'm just using it as an example, right? You could say relative to the rest of the market, render was strong. And that's important to remember moving forward into, as we, break the downtrend that we showed in Rec Capital's thing and move into kind of a new uptrend generally on the long-term time frame. Uh, those ones that perform better than the other ones are typically good bets to make. uh, I shouldn't. I'm trying to think of how to say that in a trading sense. In an investing sense,
So
yes, but in a trading sense, you might just have one more thing of momentum on your side if you're looking to long something.
yes, the momentum matters. If it to the upside, if you want to be long; to the downside, if you want to be short. Or
Yep.
the point's well taken, and it's an excellent point. Is that you got to go where, like, I guess if you're in business, or if you're in show business or any business, you got to go where your customer is, in a manner of speaking. And in these markets, some of them are more there are more participants than others, and understanding relative strength is important. And there's two sides. There's two ways to look at it. The this relative strength thing. I mean, another saying that I heard is you want to be longest, the strongest,
Yeah. Yeah. Yeah.
and you want to be shortest, the weakest. So you buy strength and you sell weakness, typically. So because you don't, unless you're going to become an expert in fundamental analysis and learn everything you can about a project or a company and trade the fundamentals, like, okay, we're trading at 30 times our earnings. Ooh, that's expensive. We may wait for that to come back down. We're two standard deviations above the average price. Uh, maybe we're overvalued right now. We'll wait for it to come. We'll wait for the price to pull back a little bit, or but not get short. Depending on, again, this is like your approach. Think about like what you're trying to really work backwards. What are you trying to achieve? If we're just trying to make money, like if you're just trying to make the money that you end up having to pay your taxes in, whether that's you're in the U.S. and it's U.S. dollars, or if you're in Europe, you're in England and you have to pay your taxes in British pounds. If you're just trying to take your local fiat currency, put it to work, and earn more of that at the end of the day, then you got to go where the action is, or how else to say that.
Nope. That makes sense. Not gonna get laid sitting in my chair in my office.
That's right.
Gotta go out into the world.
Got to get in front of the other participants in life.
Yeah,
But
that's
anyway, so just to recap what we're talking about, or what we've been talking about today. So with the SEC's enforcement action yesterday against Kraken, bit of a downdraft. Got some clarification around like what the rules were, or not the rules, but like some of the rules that were broken. And I'll hop in over to take a look at just as we look at like what stocks are doing right now. It looks like the Dow, the Nasdaq, and the S&P are kind of like hovering around yesterday's close, or at least the S&P and the Dow are. Nasdaq is a little bit off of yesterday's close, but uh, I mean, looking at the Nasdaq futures, I mean, we're not. We're, I wouldn't say that we're like. like, it's not the apocalypse. I mean, it's just prices, markets have been correcting for some time now as a result of like the interest rate policy shifting from very accommodative to more tight. And anyway, I mean, the Nasdaq, or excuse me, the Dow is only off from the high of 36,000 and some to 33,000. So, 3,000 points off the high. We're supposed to be in a recession, all this other great stuff. Anyway, looks like we're not rolling over here yet. There was some chit chat about the VIX being perking. It is, the VIX is perking up a little bit, but it just like consolidated like in the 18, 19, and 20 range, which over the last few days. So we'll have to see what happens over. I mean, at today's close for U.S. equity market, uh, we'll just have to see what the weekend action like turns into. If it's if it turns into a bloodbath, then we're positioned in APT and ETH. If if they want to like move lower to hunt for some liquidity, hunt for some market participants to get in long, they're going to have to move a little bit lower, in my opinion. But hey, what do I know? So anything else you want to add, Josh, to summarize what we're talking about today?
No, it did. I mean, I think that was a great conversation. I think we touched on a lot of important things, and as we keep doing these, I mean, we'll get to a point where we have this pretty much ironed out, and we'll have a flow. But I think that was good today. I think we went over a lot of stuff, and then what I'm noticing is as you look at this stuff on a daily basis, you do pick up more and more information, and it's like we talked earlier. You want to get to the point where it's almost like you're in a flow state, right? And you get to a point where it just comes naturally, but that's not going to happen in a week. It's not going to happen in a month. It's not going to happen in 6 months, right? And so I think the two things we covered today is like, look, you don't have to trade. Like you don't have to. You can sit and watch and ride all this volatility out and learn. And then the other thing too is kind of discussing the wet blanket idea with general direction of the market. It feels pretty heavy right now, but like you always say, you don't know where it's going to happen, what's going to happen, and that's why you got to take swings and manage your risk. So thought it was a great stream. I thought you did a great job explaining all that. I don't think there's anything else I had to cover. So I think that'll wrap up our first week of live streams.
All right, super. So, flashing the disclaimer one more time just to make sure. Please look out for number one. Uh, do your own research. Make some fundamental assumptions about what it is you're trying to accomplish and what you want to get out of whatever it is you're going to do, and then work backwards from there to sort of determine what your next action is. And we will see you in the next one. Have a great weekend, everyone.
See ya.